let's talk about Micron. So I know it's slowly become the largest position in your portfolio, and now let's see, it's over 27% of your portfolio. Rocket Lab being your second largest position is at 20%. Uh, One thing that I've been thinking about, I should have brought this up sooner, is months ago you said you believe Micron is going to around $900 a share, and this was back when it was like $300 a share, as opposed to
Right.
$600-700 right now, which puts its
And that was
market
before
cap.
the quarterly release as well, by the
Yes,
way. So yeah, we did this sort of I rarely do a sort of price estimation as to what I expect the stock price to be in a year because the market is so unpredictable. But I was basically doing some math that would uh, be, based on evaluation, a typical price earnings ratio. This is the 972 numbers, how we got there. But anyway, continue with your question.
right. So if it's around $900, that would bring the market cap of the company to over $1 trillion, which is just
Yes.
another way to look at it. So, from your assessment, is Micron a $1 trillion company? Should it be more? Should it be less? Or do you
Yeah.
think that's right on the money?
Well, let me ask you this. Do you know of any companies that generate $100 billion of profits or even, let's say, $100 billion of revenue annually that are trading for less than $1 trillion? And especially in the tech sector, I don't know of one. So,
Yeah, not off the
y-
top of my head.
like basically, we're talking about um, every company that is generating these kind of profit numbers is absolutely bonkers in terms of their valuation, right? And Micron is expected to have as much as $100 billion of profits over the course of the next 12 months. $100 billion of profits. That's more profits than Tesla has revenue. And Tesla is valued at like $1.5 trillion at times. So, um, does that justify a Micron having a $1 trillion valuation? Oh yeah, of course. Of course, I think Micron it justifies Micron having $1 trillion valuation. Um, I think a multi-trillion-dollar Micron is a possibility as well, right? It all depends on when the AI craze slows down and what that will mean for the capacity that memory makers have made and how much of that capacity will be utilized, right? So those things are sort of unknowns, but when the company itself is telling you they can only meet, 40 or 50% of their customers' demands on memory chips and that they're sold out for the next year, and that they're starting to make 5-year contracts and that they're like they understand that the cyclical nature of the business has hurt them in the past. They all get this. So this is something that these are all like very, very positive things for Micron. And then when you look at their actual quarterly performances, it's just off the charts, right? It's they just blew away their expectations last quarter and then raised their expectations for the current quarter that we're in by 50%, by $10 billion. They were expected to have $22 billion of revenue in this quarter. They raised it to $32 billion, right? Um, and that kind of raise just from quarter to quarter is just unprecedented type of numbers, and it just blows me away. This is funny because um, after the last quarter, where they blew away all the expectations and they raised the next quarter's expectations, the market decided to tank the stock. As you know, it was like $440 a share before it reported its quarter. And after it had these spectacular results, it went all the way down to $330 a share. And I think you bought some at
I
that price, right?
certainly did.
Yeah, which was unbelievable. It's now double that price since
Yeah,
the bottoming out at around 330. It has doubled in less than what 40 days? In less
yeah,
than
it's been
40
like a month.
days, it has doubled. So the question is, where was the market wisdom when it took the price down from 440 to 330? Right? People talk about like how the market kind of always knows it prices everything in. It's like very efficient. Where was the efficiency there?
Right.
And what blows me away even more is the analyst. There was an analyst from Citigroup that downgraded the stock from a $510 price target, which he had prior to the quarterly report, right, which blew away all expectations. He downgraded it from $510 to $425 per share. And my thinking is like, why did you have a $510 target price on it to begin with? And if you had that high of an expectation, what was the expectation you had for their quarter that they blew away that made you be like, they blew away all expectations and they raised the next quarter. I'm going to lower my price target. Like, what was this reasoning behind that? Like, it makes zero sense to me. So obviously I've said this so many times, I don't pay attention to analysts, but this is just sort of additional comedy that that adds to my conviction why I don't listen to analysts and I don't listen to the market itself. The market does what the market does, and I ride along with sort of like the
Right.
pricing. But just because something gets priced, the price goes up or the price goes down, people assume it's good if it's going up, bad if it's going down. And those things are not necessarily connected to the reality of how a company is doing. And eventually the reality will catch up, or the price, I should say, will catch up with reality, right? If the company is not doing well, the price will catch up to it. And if the company is doing well, the price will eventually catch up to it. So in the short term, the price might go in opposite directions, but in the long term, it always catches up. So Micron is like a perfect, it's like almost like a case study of all of this stuff, but
Yeah, it's almost too perfect.
it's too
Um,
perfect. Yeah,
it's funny because I feel like the analyst was maybe more focused on the stock price, looking at the stock price than
that's
looking at
right.
the earnings.
Yes,
That's what at
yes.
least seems like.
It 100% seems that way. And unfortunately, that's how a lot of investors invest as well. Stock price goes up, they get interested in the stock. Stock price goes down, they're like, it's bad. I should get out and sell. Um, and what the I wish the mindset of investors was more about company building. And it takes time to build a company. It takes time to execute on a product strategy, a roadmap, and the profitability of the company and execution of it is sort of like what matters, especially in the long term. One of the things that I love about Jeff Bezos is because he's got these amazing, great sound bites, a lot like Warren Buffett, about like just the wisdom that he dishes out. But one of the things that he talked about is with Amazon, all of the results that you see Amazon producing today in their quarterly reports or whatever is things that they made decisions on 3-4 years ago. And it's, beating a quarter right now is just decisions that they made 3 years ago or 4 years ago. But what we're doing now is going to affect our quarters 3-4 years down the line, and you won't even see it, right? And that type of mentality is what investors need to have, right? And is a company doing all the right things now for their future? And then if they are, that's what investors should be investing in, as opposed to, did the stock price go up and did the stock price go down?
Okay, I think we have a couple of Micron related questions that Adrian's going to bring up.
Let's do it. Hey, Adrian,
Hey guys.
hop in here.
Um, okay, we have one. Let me just pop it up here.
Okay.
Held Micron and SK Hinks for 5 years, never sold, and now they're about 60% of my portfolio. Still bullish. When do you trim winners, even if your thesis hasn't changed?
This is a great question, and I think it has to do. The answer to it is personal for every person. It might be different. Having 60% of your portfolio in one sector, in this case, two companies, but one sector, is high risk, right? But are you comfortable with that risk? Is the income? Do you have separate income from your portfolio? Like all these things should be taken into consideration. And then what might make a lot of sense, or for me, the way I often do it is I take out sometimes my initial investment, and then with the rest of it, I am willing to play much more risky or hold on to it longer, because it's sort of like, I think of it as, not my money to have begin with, and it's the rise in value of that investment, and as a result, I'm willing to risk it longer, right? And yeah, but this question is sort of like more personal than something that I would be able to answer. For me, I generally trim, but also if I still believe that the valuation is still underrated, I might not trim. So I can't even tell you what I would do necessarily. Do we have something else regarding Micron right now that we can answer as well?
We do.
Let's do it.
Hamid, what do you think Micron will do with their profits, buybacks, and dividends after the CHIP Act expiration or capital expenditures and holding cash?
Yeah, so I think that the CHIP Act is what is preventing them from being able to do buybacks any sooner, but also they haven't had a lot of cash. They've had some debt, which they just paid off something like $5 or $6 billion of their debt. Their debt, I believe, was in the $10 to $12 billion range. By the way, the way in which I store information, such as these numbers, is like rough estimations because it makes me able to sort of remember more things approximately right, but almost never exactly right. So they've already cut their debt in half just in the past couple of months. And they're going to have so much cash that they're going to be generating from this quarter forward that they have no choice but to do buybacks as soon as the CHIP Act restriction from being able to do buybacks gets lifted. And that happens, I believe, in Q1 of 2027. So I fully expect Micron to do major share buybacks in 2027, possibly as much as $40-50 billion or more. You know, it's quite possible in 2027. That is, in all of 2027, I could see them doing a $40 or $50 billion share buyback. And if the valuation of the company doesn't move significantly, that's like buying back 7 or 8% of the company based on current valuation. So, yeah, I do expect that.